We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, as U.S. lawmakers assess the regulatory response to recent bank failures, regulators make their most forceful move yet to crack down on the world's biggest crypto exchange.
And Binance defiance. CZ shoots back at the CFTC, calling its lawsuit unexpected and disappointing. We'll discuss with Sheila Warren of the Crypto Council for Innovation.
And top executives warn that an environment of harsh penalties could force them to look overseas. The CEO of Bitcoin miner BitDigital tells us where he's looking for opportunity. So all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function. What you will find is it is a bit of a mixed picture when it comes to digital assets today. Bitcoin is down on the day by about 0.6%. We are trading just south of $27,000. Ether, though, is on the up to the tune of about 1.5%. It's $17.35 at the moment. And Binance Coin, BNB Mat, also on the rise, up about 1.3% as we're continuing to digest the potential ramifications of that CFTC lawsuit for the world's largest crypto exchange.
Yeah, in fact, Meltem Demir's, Kaylee, of CoinShares weighed in as news of the CFTC's case against Binance rippled through markets yesterday. Let's listen in.
Binance is a key pillar in this industry. One of the things, I sort of said this morning to myself was, okay, the last shoe has finally dropped. This was really what I think the whole industry was waiting to see. Will something happen about Binance? And so I don't think anyone is necessarily surprised by this morning's announcement. I think there were certainly things in the announcement that were surprising, but not surprised that Binance is now, formally being investigated.
Now, for more on the claims and the striking evidence laid out in the CFTC's lawsuit, we're joined by Ava Benny-Morrison, Bloomberg legal reporter. So, Ava, tell us first off what the core allegations are against Binance.
The CFTC has sued Binance, alleging that it allowed US customers to trade on its offshore exchange, also alleging that it encouraged US-based trading firms to use offshore shell companies to trade through Binance to try and get around some of those AML and KYC protocols and the regulations. And it's also alleged that their anti-money laundering programs and their Know Your Customer programs were completely ineffective.
If we could just talk about the significance of this particular CFTC lawsuit against Binance, can you just give us some color around that, considering it has repeatedly faced scrutiny from several regulatory agencies here?
Absolutely, and you're right. Binance has been under scrutiny from several agencies, from the IRS to the SEC and to the DOJ. This is sort of the first blow against Binance that we've seen from a regulatory or a law enforcement agency. This isn't about criminal enforcement. There are no criminal charges here, but the consequences could be pretty dire for Binance. The CFTC wants to ban the exchange from trading in derivatives.
What is the jurisdiction? What are the jurisdictional issues here? I mean, if people were acting in the U.S. through VPNs, through virtual private networks, and through shell companies in the Cayman Islands and Jersey, does the CFTC have to prove that they were actually doing the work in Chicago or New York, for example?
The burden sort of falls on Binance for allowing US-based entities and customers to trade on the exchange, as opposed to the onus falling on those trading firms. So it's not illegal, from what I've been told, for those firms to be using offshore entities to trade in the US. But if Binance is advising them to do that, then that's what's going to land them in hot water.
And finally, if we can talk about someone else who already has landed in hot water, FTX co-founder Sam Bankman-Fried already has been charged with plenty, but he was hit with a new charge yesterday, accusing of bribing a Chinese official, or being accused of that. Can you talk us through it?
This adds a whole new element to the FTX case. A new charge was added to his indictment yesterday and it was unsealed today. Bankman-Fried is accused of bribing Chinese government officials to the tune of at least $40 million in 2021. And he was trying to, as prosecutors say, to unfreeze about $1 billion worth of crypto assets that was held in Alameda trading accounts.
All right, Ava, thanks so much for joining us. Bloomberg's Ava Benny-Morrison walking us through the CFTC suit and talking also about the new indictment against Sam Bankman-Fried. Joining us now from San Francisco is Sheila Warren. She's CEO of the Crypto Council for Innovation Trade Group, and we'll put aside the SBF concerns and talk really about the CFTC suit. What do you think about this kind of enforcement? As CZ has said, it was a surprise to Binance. He says they've been working with the CFTC really closely for the past couple of years. Why now?
Well, there's a lot in there, Matt. I think, first of all, they have been CZ responded, they've been working with this agency for 2 years, but of course the allegations here go back to 2017. So they predate any kind of engagement that Binance is claiming to have made, which is probably a fair recording of what actually happened here. The other thing is that these are a variety of different kinds of allegations, and they're not foot faults. They're really serious stuff here. And the kind of evidence that the CFTC seems to have, text messages presumably pulled off somebody's phone that really talk through coaching people on how to evade known law. This is different from other enforcement actions we've seen from the SEC, for example, which basically is citing failure to come into the regulatory perimeter, right? But here, they're actually saying these are really well-established rules and laws around how to conduct anti-terrorist surveillance, and the flaunting of them is a pretty deep and problematic allegation here.
In terms of what could happen, because these are just civil claims and not criminal claims, what do you expect the fallout to be for Binance and for the broader crypto industry?
Yeah, well, I think we should first note that they're not criminal charges yet. We've yet to see action from the DOJ, but some folks in industry have been anticipating that there might be some of that coming down. I saw you had Meltem on earlier, and we've been waiting to see who was going to go first, really, in against this particular exchange. I think the fallout is something, as Meltem noted again, it's been expected. We've kind of been waiting for a little while to see which agency, which body in the U.S. government was going to kind of go first here. Turns out it was the CFTC. They got the evidence together first, presumably. It's something that I think people have been, back of the mind prepared for, but this is the largest global exchange that exists in this ecosystem. And so I think we're going to have to see how all this plays out. A lot will depend on what Binance chooses to do. Are they going to go to court and fight it? Are they going to settle? Right. We have to kind of figure that out and see where it goes.
Well, we know what Binance has not chosen to do today, Sheila, is join this program. I do just want to state for the record that we did reach out to Binance. I directly reached out to CZ on Twitter via direct message. He did respond. He said, no, thank you to joining. He said that their response is public and they won't be commenting further on it. So we look forward, hopefully, to speaking with CZ one day in the future, just not today on this matter. Sheila, you were just discussing how this is such a big player in the industry. This is the world's largest exchange, which begs the question of what you think regulators are trying to accomplish here. Is it about putting a stop to bad behavior, or is it about choking Binance out of the U.S.?
Well, I think it's probably both, but I think in the minds of some of these agencies, those things are somewhat equated, right? They certainly don't see Binance as a good actor based on the allegations in this action. And so I think that they're very interested in ensuring that anybody who is trying to exploit the lack of regulatory clarity realizes that the U.S. is not open to that. Now, the challenge, of course, is a lot of good actors are getting swept up in some of this. There's no question this industry is composed of some bad actors and some good actors, and we're going to have to just hope and cross our fingers that the good actors do not get overly punished. But we're already seeing some of that happening, Kaylee. So the challenge is going to be, does this desire to go after those who are perceived as acting in bad faith sweep out everybody and mean that this entire industry gets offshored out of the U.S., which I think would be the worst possible outcome.
Well, there's also the question of whether they have to go offshore for banking. I spent my morning on Capitol Hill at the Senate Banking Committee hearing regarding the failures of Silicon Valley Bank and Signature Bank. And we know that both of those banks catered to crypto depositors. The question has been raised whether this is another Operation Choke Point. What do you think?
I think that we are seeing the discouraging of banks to engage with crypto companies. And what I find really, really problematic about that is we're not distinguishing between a corporate account, which is doing something like anybody else is doing. It's making payroll, it's paying taxes, it's dealing in fiat in a very traditional startup kind of way. And the idea that a well-funded crypto startup is more risky at the corporate level than any other kind of company or startup that is similarly funded is discriminatory and really problematic. Now, I think that there are some reasons and some conversations to be had about the custodying of crypto assets, which is a different thing, but that's not what we're talking about here. So, look, I think that the systematic pushing out that's happening across a variety of different actors, I think agencies are taking this differently. Some are kind of taking an overtly hostile stance, and some are trying to say, look, we're trying to lay out some rules here. We're trying to figure out what good actors can indicate that they should be doing. But I think you have to look at what happened with the SEC and this Wells notice against Coinbase as indicative of overt hostility from at least that agency towards the entire crypto industry. I don't know what else you could ask of a company apart from trying to come in multiple times, documented in writing, asking questions about what needs to be registered and what the process is to do that and getting no response. That doesn't seem like the actions of a government that's really trying to encourage innovation onshore.
Well, what is happening to innovation, Sheila? Because at the same time as we see, crypto essentially being choked out, and it really does look like that from the 1-2 punch of the collapse of SVB and the suit against now Binance, we do see the price of Bitcoin, for example, and a number of other coins rising dramatically. Why do you think we have those two kind of conflicting signals?
Well, here's the irony. At the same time as you're having an encouragement of monopolistic behavior in banks, right? As regional banks are under threat and community banks as well, you're seeing more and more flocking to big giant banks, GSIBs, that are considered too big to fail, those banks that were allocated as such, right? That is kind of creating a monopoly in the banking system, which is something folks have warned about for a while. Going back to 2008, the origin story of Bitcoin lies in the 2008 financial crisis. So at the same time as you're seeing this kind of certain people, I don't think this is consistent across the government, which is not monolithic, but some folks are looking to blame crypto for this. You're seeing others who are saying this is a validation of the very reason crypto exists in the first place. So that juxtaposition it's kind of mind-blowing when you really think about it, Matt, but I think that's what you're seeing in the market.
All right, Sheila, we have to leave it there, but thank you so much for your time and insight today. Really appreciate it. That is Sheila Warren of the Crypto Council for Innovation. And still coming up, we'll speak with Sam Tabar. He is the incoming CEO of Bitcoin mining company, BitDigital.
Yeah, and to access all the latest data and the news on crypto, go on your Bloomberg terminal and type CRYP GO. This is Bloomberg.
On the crypto side, we're looking at a much higher reserve required for crypto assets. So I think people need to be assured that in some ways the safety and soundness of crypto is going to be higher if it's regulated. The problem thus far is that it's not been regulated. It is the Wild West of cryptocurrency.
That was Senator Cynthia Lummis of Wyoming speaking with me earlier on Capitol Hill in hearings surrounding the collapse of Silicon Valley Bank and Signature Bank, both banks that did cater to crypto clients. Joining us now is Sam Tabar. He is incoming CEO of Bitcoin mining company BitDigital. Sam, it speaks to the broader question out there right now, and thank you so much for joining us about after these collapses, where crypto companies go to bank. Is that still possible in the U.S.?
Well, look, regulators have certainly made it more difficult for crypto-native companies to get access to banking. There are other regional banks that are stepping in selectively to fill the void, but the system is much less supportive than it used to be, and many are on the sidelines just waiting to see what happens. The fears around Binance are also not helping, and many users are likely moving coins off the exchange and into cold storage, which probably explains the lower volume these days.
Well, speaking of things moving, is the end result of this just moving offshore? Is that something BitDigital is pursuing?
Well, it's funny you ask. Our entire fleet used to be in China, and we decided to move our entire fleet from China to the United States because we felt that it was just too much jurisdictional risk to stay in China. And as we're moving our fleet midway through, China announced a ban on Bitcoin mining. So we just accelerated that entire movement of the fleet into the United States, which we felt was a safer place. So we continue to see that the pattern continues. China had a go on Bitcoin, nothing happened. Bitcoin is not something you can destroy. It's a decentralized asset. Banning an entire industry does nothing to Bitcoin. It has no effect. But we are looking at other jurisdictions now, other countries, and we have to. Part of our jurisdictional diversification to diversify our risk forces us to look at other countries.
Is it possible to get to no jurisdiction? Because it seems like that's what Binance was trying to do, and it feels like that's where Bitcoin really belongs, but it doesn't seem possible with all of these governments working together.
Look, we're pro-regulation, but we want regulation to be well communicated, and it can't just be simply carried out via enforcement on ambiguous rules. Bitcoin mining, for example, comprises of 0.2% of global energy use, and over 60% of that is sustainable. But politicians are unfairly painting the entire industry as some sort of dirty energy and are threatening these unwieldy taxes and outright bans. Forcing Bitcoin mining out of the United States would simply transport the industry elsewhere, and it would just decrease the U.S.'s ability to be a powerhouse in this new industry that's not going away.
Well, a lot of times people are terrified of things they can't understand. Sam, let me ask you about the price action we've seen, because it's been pretty impressive. Even after the collapse of FTX, even with the threat right now, although it's only a civil threat, we want to remind our viewers to Binance, not a criminal threat. Nonetheless, it's not a great look. We still have Bitcoin trading at $27,000. Is that because of low liquidity? Somebody still has to lift the offer. How do you explain the price action?
Yeah, well, the loss of Silvergate's exchange network and Signature's Signet has certainly reduced the liquidity as market makers use these banks for 24/7 settlement. So there is a technical reason for the volume. However, there is also a logical reason why Bitcoin is going up. And it's because Satoshi's thesis about the financial system having too much control and just can censor transactions and just having, as you could see, banks are falling apart again. That happened in 2008. That is exactly when Satoshi invented Bitcoin, because he saw that the financial system had way too many holes, and he wanted to create a system where it was completely decentralized and fail-proof. Bitcoin is a fail-proof system. And so he invented that in the last banking crisis, and here we are again. Another banking crisis, you'll see Bitcoin going up. Eventually, Bitcoin will be seen by a lot of people as digital gold. It's the ultimate way to hedge against macro bets, inflation, and this sort of thing that's happening today.
Well, and just like gold, it has to be mined. So one final question on Bitcoin miners, many of which we have seen come into pretty serious financial trouble. Is the Bitcoin mining industry through the worst of it? What challenges do you still face?
I agree with you. A lot of our peers, unfortunately, drank their own Kool-Aid and levered up and took on debt on their balance sheet while Bitcoin was going up through the roof. I think past 50,000 people were really getting greedy. We did no such thing. We have a very healthy and pristine balance sheet. We have over $65 on the balance sheet. We have absolutely no debt. BitDigital has no leverage, no capital commitment. So we ran a pretty conservative and tight ship. And we're even in the business of potentially even lending to people in the industry who need the money because we have such a great balance sheet. Having said that, this is a lesson to be learned in the future. There will be another bull run, and the industry needs to run a business, and run a business means you can't just hope on the direction of Bitcoin. You've got to run your business regardless of the direction of where Bitcoin is going. That's what we do.
All right, Sam. Well, thanks so much for joining us. Really appreciate your time today. I know it's an incredibly busy, even with low liquidity, an incredibly busy time for the crypto industry. Sam Tabar there of Bit Digital, as they move to diversify their operations, he's got a heck of a lot to do. Be sure, by the way, to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller in New York with Kaylee Lines in Washington. Let's get to some crypto stories that caught our attention this week. First off, Terraform Labs co-founder Do Kwon is being held in quarantine in Montenegro. That's after he was caught trying to fly to Dubai using fake passports. He's wanted in the U.S. and South Korea over a alleged cryptocurrency fraud that wiped out at least $40 billion in market value. He and CFO Han Chang-jun can be held under investigative detention for up to 30 days there.
Meanwhile, Galaxy Digital posted a fourth quarter net loss totaling nearly $288 million. That compares to a net income of $521 million in the same period a year earlier. The crypto financial services firm founded by Mike Novogratz attributed it primarily to unrealized losses on investments during the slump in token prices at the end of last year.
And speaking of slumps, Kraken is teaming up with Formula One. The crypto exchange signed a multi-year global pact with Williams Racing for their logo to be placed on the Williams cars and team uniforms. This is their first major sponsorship deal, even as sports tie-ups with digital asset firms have really decreased in popularity. I have to say, Kaylee, this is a sport that eats money. And you do see sponsors coming and going in Formula One. However, a lot of people put the viewership at 500 million per weekend. So that money does buy a really broad exposure. And if that's what you're after, maybe that's what they're going to get.
Yeah, I mean, I can't say that I'm one of those viewers, but clearly there are plenty of people out there doing it, Matt. And I just think the numbers, the change from 2022 to this year in our Bloomberg story is really astounding. In 2022, all 10 teams had at least one crypto sponsor. That presence of crypto sponsors has almost halved at the start of this season, which just goes to show you how many of these companies are pulling back on their big spending in the hundreds of millions of dollars they put out there to sponsor sports and stadiums and the like.
Yeah, exactly the point, I think, of the story. Coming up next week, by the way, Paul Brody, global blockchain leader for EY Blockchain. This is Bloomberg.